I can really hold my own. If you want to fight tonight, it's those boys don't look around town. Brad said, "Oh yes, you can." As good as I want. That's just a cold hard truth. I still throw a few back, talk a little smack, and I'm feeling bulletproof. So don't ever me now. I have to call you blood. I ain't as good as I once was, but I'm as good once as I ever was. May not be good as I once was, but I'm as good once as I ever was. Can last trying to call the whole year. All of the faces and all of the places, wondering where they all disappear. I didn't want any question me long. I was hungry and went out for a bite. Ran it, chunk of the bottle of rum, and we wound up drinking all night. So changes and attitudes, changes and attitudes, nothing's the main sky say. All of my running and all of my running here, we could fly, we would all go insane. Beating your heart to time and some bigger for reminds me of the places I've been. Patience with good times, they brought so much pleasure, makes me want to come again. Deep inside, it's tomorrow. I could somehow just do about the time. Just and son of a bitch is out, see more than I can take on. These changes in attitudes, changes in attitudes, but them remains quite the same. Good morning, everybody. Happy Friday. We'll get started here in about 2 minutes. Okay. Many nights I just dream of you. I wish you would say hello again. It's been different, sure. I can't look back for too long. There's just too much to see. You get in front of me, and I just can't hold on. With me shaking, shaking, things like a thing. Without nothing, all yeah, we couldn't fight with it, we were crazy, we were. bay, and it serves 100 ships a day. Lonely sailors pass the time away, talk about their homes. And there's a girl in this harbor town, and she works laying whiskey down. They say, Brandy, catch another. She serves them whiskey. Good morning, happy Friday. Let's get a couple things into going here. All right, just making sure a couple things going here. Yeah, can you post that in the futures talk, please? Okay.
Order filled.
All right, what do we got going on here? All right, good morning, happy Friday. Sorry for the slight delay there. Yeah, I just wanna, can you repost that in the futures talk area, please? Okay, thanks. All right, happy Friday, everybody. Let's start off. Let's get started here. Yeah, it's a little quiet, a little warm here. A few things as we get underway. We're going to expect some light volume. Let's jump out to the charts real quick here. What we're noticing with the gaps, okay, I'm looking at the exchange traded funds to see what type of gap we're looking at. Okay. Okay. Yeah, they're not going to see it. Okay. All right, so what type of a gap are we looking at on the IWM is more of a breakaway gap, and what we're looking at on the diamonds also a breakaway. Now, and the SPY also looking at a breakaway gap. Now, the one to keep attention on is the Qs. And why is that? Well, this is prices consolidated sideways here, okay? So often this leads to more of the runaway gap, okay? And that's why we need to understand the market ahead of time and what things are out there that help influence what we see, okay? So here we have a price basing sideways on the Qs, and we had a measuring gap, or what we refer to as a runaway gap, okay? Price gapped up after price consolidated sideways. Price gapping down, price after price consolidated sideways. So the pre-market, as we're looking at the exchange traded funds, which impact our equity index futures, okay, is that we're looking at this type of a move down because we're having a measuring gap to the downside, and it's also referred to as a runaway gap, okay?
Whereas the breakaway gaps often break away and then they retrace back up. Okay. In this case, they're breaking down to downside and move back up. So there's going to be some trading opportunities. Okay. But for as the SPY, the diamonds, and the IWM, Russell, okay, is that we may be waiting a little bit longer in the session. Okay. Roughly about 10:30, 11 a.m. Eastern. Okay. But as far as the Qs go, we might be looking at that potential just where it just keeps drifting in the same direction. All right, now let's step out to the S&P. S&P has just barely broke the prior session's low, okay? And we consider it broken, okay? Now, one of the things that we posted this morning to help to get the um, help people understand, why do I mark the prior session's high and low? Why do we mark the Globex high and low? Okay. Well, let's just start with the prior session's range. Okay. These things are designed to help you understand the trading environment, what to expect. Okay. So I put together a little chart over here, kind of giving us an idea of the prior session's high and low. Okay. When price is still inside that range and has not broken, it's an inside day. Now, inside days are choppier conditions. Breakout trades often fail. Momentum is not quite there enough for us to uh, make really solid trades. Okay. And trades are better later in the session. Now, the other scenario is price breaks the prior session's range, okay, either to the high side or to the low side, okay, and then it becomes an outside day. Okay, well, outside days kind of open up a little more opportunity to take breakout trades and our zone entries. Okay. Now, if price opens outside of the prior session's range, it's often a gap and run. Okay. So when we bring up the NQ, we can see that right now we're still about 22 minutes before the session open. Okay, the price is still inside the prior day's trading range. Okay. Now we still have about 22 minutes and price could be anywhere in that period of time. But currently, how we assess the market conditions by having some very specific data that we can track every single day and then see if that fits into our trading plan. Having a good understanding of where the market may move throughout the day is really helpful in the pre-market, okay? Knowing what generally unfolds uh, by having some specific measurements to identify. Okay, so right now NASDAQ is still inside the prior day's trading range, inside day. Now, another thing to consider about the inside day is that gaps often fill the same day. Okay. So if the gap is going to fill today, and if we open inside the prior day's trading range, we would anticipate that the NASDAQ needs to go up to fill the gap. Now, it may go down and find the buyers first before it does that. Okay. This is not implied to make a trade at this time. This is helping us understand the trading environment before the market opens, okay? When we're looking at the Dow, Dow is still an inside day, price inside the prior day's trading range. And as we're looking at this, we're seeing that the Globex range is also about 228 points, okay? So we take the prior session's trading range and we're looking to see, well, what kind of conditions are there going to be at the open? Choppy, non-directional, uh, gap fill or no gap fill, okay, gap and run. So currently Dow inside the prior day's trading range, anticipating the gap fill, okay. Yesterday we had the same scenario where we started off as an inside day. Price broke outside of the prior session's range, and we did end up filling the gap on each one of the equity indexes. Okay. And yeah, I just want okay. So what we're doing is looking for how the market may open, okay, how it may continue to go. Currently, Dow inside the prior day's trading range, choppier at the open, often a good time to sit back and wait a little bit longer. Now, if you know when to wait, it's okay to wait. When you don't know when to wait, you tend to press the button, okay? At least I do, okay? All right, so Russell is an inside day. Dow is an inside day still. NASDAQ just about to break, okay? It hasn't broken yet. And the S&P has broken, okay? Now we also want to take the no, good question. 14042. Prior to the session, is it's a day session, the entire session? No. What we're trying to see is what's happening in right now, okay? Well, currently, right now, markets, NASDAQ, Dow, and Russell are inside the prior day's trading range, okay? So right now, the weather conditions or the conditions of the markets at this point is I'm expecting more of a choppier environment, and I'm willing to wait when trading the Russell, the Dow, or the NASDAQ currently, okay? Now, once price breaks the prior session high and low, then the rules tend to change, okay? Now, a lot of traders like to take breakout trades and have some momentum to their trades, okay? While inside the prior day's trading range, we don't get a lot of that momentum or that follow through, okay? And zone entries are a higher probability of getting into a trade, less risk, okay? The breakout trades are very tempting when it comes to trading on inside days, but they really highly, a large percentage of the time, fail. Okay. Now, if you know breakout trades fail on inside days, then you would be able to verify that information, document it, okay, and then incorporate it into your trading plan about understanding how the conditions of the market are. Okay. I also want to point out as we get underway here that look at the volume on the Dow 30 stocks. Extremely light volume. Okay. We're 15 minutes away from market open and very light volume. Now, this often parallels to an inside day. When we have very light volume and inside day, and then we got economic news coming out or political news, things like that, we can experience bigger whipsaw price action. Light volume invites more volatility, okay? Big price moves. Therefore, your stops, you could experience slippage on the trades and so on, okay? So again, this is understanding our trading environment that we're stepping into this morning, okay? Right now, the December 27th, 2024, okay? We have demand zones down below and supply zones up above. We got a couple of unfilled opening gaps that still look to be filled. S&P is outside the prior day's trading range, so we can take breakout trades on the S&P, but I will avoid them on the NASDAQ, the Dow, and the Russell at this point, okay? And the Russell's even looking really tempting as far as a breakout trade because we have a nice support in the overnight session. But these can be really big traps, okay, and kind of start off your day on the wrong side of things, okay? As we move forward, let's take a quick look outside of the market here, outside the index, get a feel for what's going on. We have what I'm clicking on right now is the 10-year yield and the 2-year yield, okay? They're showing a little bit of weakness, okay? We did see the dollar drop below that support, and now it's starting to base a little bit, okay? Kind of sideways the last couple of hours. The trend, which is the NYSE trend, and because of such light volume, we're seeing that the pre-market trend is down at 13. Very, very low, okay? Now, if the trend is low and the markets are dropping, that's kind of the negative divergence. If the trend is low and the markets are shooting up, that's a positive divergence. That's what we want to see in order to make a trade. On the other side of it, if the trend is high and the markets are dropping, that's the opportunity we want, or that's what we want to see when we have the opportunity to go long, okay? NASDAQ pre-market indicator, okay? Really kind of a flat open today. Now, the pre-market indicator developed by the NASDAQ exchange to help anticipate traders' sentiment at the open, whether traders are feeling bullish or traders are feeling bearish, okay? The NASDAQ pre-market indicator has a 92% correlation as to traders' sentiment. So we're not looking to make a trade off of the information I just shared with you. We're looking to understand the trading environment. Right now, the sentiment is like, don't know what's going to happen here. Now, the pre-market VIX, the volatility index, is gapping up about almost $1 now. Okay. Now, that's a signal that things are a little uncomfortable. And if you have that fear gauge, the fear is starting to, we're getting closer to that, fear and uncertainty. Okay. So, again, as we are going through this information and the information gathering process here, it is designed to help us understand the trading environment and not create a bias or make a decision based on a single data point. Okay. So very often we want to see the dollar and the 10 and the 2-year yield going together. When the dollar's dropping and the yields are going up or vice versa, it's a time to wait and understand that these signals are there ahead of time to help us anticipate the session open. Okay, so let's come back out. Russell is still inside day and pushing the Globex low, and we're about 10 minutes or 12 minutes away from market open. All right, crude oil. As we understand, one of the things I've been marking on the crude oil is the 5 p.m. close and the pit close. And over time, what we've noticed when using that information is that price comes back to it, okay? Whether price is above it at the open, it seems to gravitate back to the pit and the prior session's close. All right. So as we're seeing crude oil moving higher in the pre-market, at some point during the day or in the overnight session, I'm going to anticipate the price will come back to this level. Okay. Our higher time frame may give us, may be a little more misleading. Okay. Before we get that pullback. Because we're looking over here at the daily chart and we got a nice resistance area, okay? Keep in mind that this resistance area that I'm identifying does have that little speed bump, or what we call is an obstacle right above that potential breakout, okay? And the breakout level is 7109, okay? So we still have a lot more upside. Let's go just above that 7109 area and look left. Let's see if we can find a supply zone. Well, we're going back out to the other contract here. And we'll look for that leg base group of candles. Yeah, I'm gonna eyeball this area right up in this range here, okay? Now that, what I just highlighted here is that little speed bump area, okay? And that high point it's an obstacle. It's where I expect there to still be some unfilled sell orders, okay? And once we hit that level, we may pull back into, as we were just talking about, the prior session's 5 p.m. close and the pit close, okay? So at this point in time, we don't have much obstacles. We just have a little resistance area up above. And for the traders that are looking at crude oil, we also want to measure the Globex range and compare it to the daily ATR. Okay. If the Globex range is in the middle, about 40 to 70% of the daily ATR, okay, it's usually a choppier open. If the range is narrow or wide, then it can provide some trading opportunities. Okay. Everything is scripted. Okay. As far as how do we handle the information on the price chart. Now, the reason I'm sharing a lot of this with you is because there's not a lot of trade opportunities to jump into right at this moment. Okay. We're 8 minutes away from the market open. The Globex range on the S&P is right about the middle. Okay. Globex range compared to the daily ATR, excuse me. And when we see that, we're right about the middle, we can expect it as well, a little more choppier session open. So what I've shared with you today is understanding how the market's going to open here. Prior sessions high and low, and whether price is opening inside or outside that range, and whether we expect a gap fill. Okay. So when price opens outside that range, it's more of a gap and run. Okay. So in Q, we're getting close to potentially having that gap and run scenario. We'll just see how the where that Globex low flat comes into play. Now, a gap and run on the NQ would be in line with what we just talked about on whether we have a measuring gap or whether we're having breakaway gaps. Okay. So what I'm expecting to the downside on the Qs is a pattern very similar to this, kind of a runaway to the downside. Okay. That doesn't mean it's going to be that way the whole day, but it's certainly helping us with the direction and planning ahead of time. How would we handle that information? Okay. All right. So on crude oil and nat gas, we have that first 5-minute candle where from the pit open. Okay. And with that first 5-minute candle, we have an open range breakout trade. Okay. Okay. NQ's now an outside day. It certainly is. Now, in about 6 minutes, we want to see if it's opening outside or if it came back inside. If it comes back inside around the 9:30 open, we still expect the gap to fill. It has a high probability, but not the highest probability. If price has not broken the prior session's range, and we have a very, very high probability gap will fill. Okay. If it opens outside, we could be looking at that gap and run. Okay. Now it's really simple pieces of information, but that information that we're using helps us make a plan going forward. How do we anticipate the session open? Jumping right in, or we're going to wait a little bit, okay? Russell, well, we're looking to wait just a little bit, okay? Dow, we're still looking to wait just a little bit, still an inside day, okay? And I'm constantly measuring the Globex range till session open to anticipate if we're going to have more of a choppier open, kind of whipsaw action, or whether we're just going to slowly kind of do that drifting, okay? And we're still just, we're getting really close. NASDAQ, 4 minutes. And S&P still drifting lower, okay? We do have an unfilled opening gap from a couple of days ago, the 23rd. And those gaps often like to fill as well, okay? Volume very light, so be careful out there. All right, crude oil, we're going to take the open range breakout to the upside due to the Globex range. Okay, we can also see that heating oil is pushing right at that breakout area. Heating oil and gasoline tend to lead these markets. Okay, placing an order to go long, we should be on February contract, right? Okay, so 70.49. Open range breakout. Once filled, I'll come back and place a stop loss at 70.34. And my target range will be about 71.59. And then eventually coming back down. Okay. Nat gas. Today is the last trade date on nat gas. Okay. So traders will have to close out of that front month contract and move to the back month contract. Okay. Good morning, Miss Chris. Good to see you. I do want to explain a little bit about this. What we've been, what I've started documenting was the 5 p.m. close and the pit close. And I've noticed that price comes back to that range quite a bit each day. Okay. I don't think we've had one day where it has not come back to that range. Okay. Doesn't mean it's the immediate trade, but it's something I just started documenting that we can add to our trading on that. Stop loss coming back in, putting it 70.34. Every time you put your stop loss in, make sure you look at your dollar amount and acknowledge, okay, how much risk you're taking on a trade. Okay, because if it's outside that risk, then you need to really reevaluate your trade plan. Okay. Now I'm also willing to take the trade short. We do have crude oil and natural gas reports coming out today, so there might be some volatility around that. This strategy we're looking at right now is called the open range breakout. Okay. So at 70.34, I'm going to sell. I'm basically going to cover my long and take 2 contracts short, and then I'll put my stop loss. Okay. The open range breakout is just the overnight trading compared to when the physical trading or the physical market opens up. Okay. And we're looking for that discrepancy there. All right. Session open, and we're also. Okay. For those that have been following us a little bit as well, we're looking at the peaks and valleys on crude oil and natural gas during the time when the floor traders or the bigger traders start coming back in, usually about 2 hours before the session opens. Okay. And we look at those peaks and valleys to anticipate how much time it will take for price to retest the the open range area. Okay, so we're looking, we got what's that time? 8:25. So we're looking about 30 minutes. Okay, about 5 more minutes. We'll look for price to pop back up to that 3.416. And at that point, now last trade date has often shown that prices do pull back as traders get out of that front month contract. Okay. All right. So how did the S&P open up outside? Ooh, way outside. Okay. So gap and run. And when we compare the Globex range to the daily ATR, we're right about the middle. So we're going to wait for price to come down, feel the unfilled gap, and look for the prep screen as an entry. Okay. NASDAQ also opened outside the prior session's range. And we're looking for, we have an unfilled opening gap and we have a prep screen zone down below. Noticing that the leg candles in the zone are bigger than the leg candles leaving. So this would be a proximal line entry. Okay. So because of what we saw on the Qs, we're expecting kind of a gap and run versus the breakaway gaps where we have a gap and it bounces up to the reverse leg base. Okay. Oh, thank you, Miss Chris. Okay. So for the NQ, I'm going to set this trade up ahead of time. I'm going to look for just slightly inside the range and filling that unfilled gap. I'm going to look for a long opportunity about 21,729. NQH25. $735. I'm putting this out there ahead of time in case we get some economic news or something like that. All right, 735. All right. So as we continue with our pre-market assessment, some other things to note. An NQ often respects that 20 simple moving average, okay, on the daily chart. Keeping a close eye on that for a potential bounce. It goes a little, overshoots it a little bit, and then it comes back, and that's where we're waiting for our trade to go long. Okay. All right, see what the Dow's doing. Okay, Dow. Dow, we're looking for a price opened, and now we're looking for that potential gap fill. Okay. Russell. Also an inside day, we're looking for the gap fill. So we drop down to smaller time frames. Just kind of watch where that potential gap fill is at. Also note the Russell is below the daily 50 moving average. More bearish conditions. Dow is also below the daily 50 moving average. And here comes the NASDAQ coming around the far outside. Yeah, we noticed that too. Yesterday, the Econoday website was posting that the crude oil report was yesterday. And now today they posted it was 1 o'clock. Okay. Forex Factory says it's 11 o'clock. So this time of year, you got to realize that there are human interactions when they're posting those things on the internet. It's not just a computer putting it together. So whoever had the job on Econo Day has really messed up that crude oil report and the timing of that a couple of different times on that. Okay. So this kind of, that's why we always check multiple sources when it comes to uh, when it comes to that. Okay. Checking economic reports. Okay. All right. Here comes the NQ. Now we're not going to stay too long because we're still expecting more of a runaway. Yeah, that's what I was thinking, Liz. It was more of a typo. And then I just kind of chalked it up as, somebody's on vacation and the normal person is not doing it. Somebody's standing in to help them out. All right, there it is. Come on, you can do it. Give us our entry. Oh, come on. Just missed us by a couple of ticks. There you go. Kevin went right to the source. All right, so stocks, we're watching. I also want to point out, notice what time price arrived at the zone. Okay. So this trade is taking on some more risk at this point. Price arrived in that zone or at that zone earlier than the quarter hour. Okay. So the risk is becoming more elevated to take the trade long at this point. Okay. We want to see when price arrives in a zone or at a zone, it needs to arrive on time, right on the quarter hour. Okay. If it arrives early, goes into the zone earlier than the quarter hour, and what is earlier? Well, it's about 4 and 5 minutes early. Then price can go through that zone. Okay. Very high, quite a few times. So we're going to look for a bounce to draw everybody in. And then we're going to look for this zone to fail. Okay. Now that still goes along with what we are talking about on the as far as the gap and the runaway gap versus a measuring, sorry, runaway gap versus a breakaway gap. All right. We're taking on a little extra risk right here as price is dropping. Yeah, I might have to get out at a break even here. Bum, 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 bum. Yeah, stocks are still selling off. There we go. Starting to get a little bit of a bounce. Now, if I'm looking for a bounce back up, it's going to be just around where that 20 moving average is. Now that price has arrived in that zone earlier, I'm going to anticipate that it's going to fail. Okay. Make sure your stop loss is in place. These are clues that say, hey, things could fail. Okay. If it starts to bounce back up and we can get out of break even or a smaller loss, fantastic. Okay. I think we're going to get a bounce. We got a couple more minutes and we're starting to see the stocks give us a small green candle on some of them, not all of them. Yeah, I'm gonna have to step aside on this one. Come on, get us back at break even. There we go. Come on. See, by having a good understanding about what's going on the charts ahead of time, okay? Now we're looking at that 20 moving average, which is roughly about that 21,800, okay? Now here's my opportunity to get out at break even or reduce my stop loss. Okay. Let's just say I'm going to have a maximum risk of like 50 bucks on this.
Order filled.
Oop. Let me close that position there.
Order filled.
Okay. So I reduced my loss. It wasn't, I mean, we had an entry here, but we're also expecting a runaway gap. Price arrived in the zone earlier than the quarter hour. Okay, we may still see a bounce, but it's looking more like that gap and run. Okay. S&P, we're still looking at that unfilled opening gap. 50-day moving average will be another place that we want to pay close attention to at 6,031 area, which puts us right in that prep screen zone. Check the time when it arrives. Okay. There we go. We're starting to fail that zone. And let's see, what do we have below it? Anything? Yeah, we got that whole dead space. So we had a plan to get in. We're not expecting the gap fill now today because we opened up outside the prior session's range on the NQ. Okay. Russell hanging out. Crude oil still working. All right, and we're waiting for nat gas to pop back up into that 3.416 area, and then we'll continue to look for this short. Okay. Gold has come back down and tested a support. In our pre-market routine course, we cover all of these little things that I'm covering with you at the moment. Okay. But I give you the details behind, well, why do we use the prior session's high and low? Why do we use the Globex range? And why do we expect a gap fill and so on? You need a systematic step-by-step process where you can measure things on the price chart and document it over periods of time so you can understand that trading environment. All right, so price came into that zone earlier. We do have another prep screen zone slightly below. Prep screen zones are different than the leg base. There are zones that are formed during the regular trading hours. My charts. There we go. And remove any unnecessary information. And I'll look for if price arrives in that zone earlier than or at the quarter hour. Okay, we're right now at the quarter hour. If it arrives on time, then we will have an opportunity to make a trade. And how we doing on the Russell? Russell made a lower high. Russell is still an inside day, so you need a zone entry. In order to have a zone entry, it has to be located in the sell territory. Price arrived on time here. Okay, notice the time down below. And we had more than a 2-to-1 move away. So a trader could take a trade entry at the breakout, going back down to find demand. Okay. And we'll look to see how this this zone holds out. Okay, you could take it in the zone, just make sure you have managed risk. I'm going to start off with 3 micros.
Order filled.
And I'm going to put my stop loss at right there about that 22.93. Then I've used my Fibonacci price extension tool and anticipate where we'll look for the target 1 and target 2. Okay. Now I have a plan to get stopped out at a specific price. I'm managing my risk. I also have a plan to take a profit. Okay. In every trading plan, you need to have both. How are you going to manage your risk on a trade? Okay. Looks like I might get stopped out on that. And does that risk fit into your trading plan? Okay, those are all key pieces of information that we want to pay very close attention to. Okay. Now, the trade stopped us out. That doesn't mean you failed on the trade. Okay. We had a plan. We had a purpose to get in. We had price in the sell territory. Okay. On the Russell and SPY and the Diamond, okay, we're expecting that price to move back up as a breakaway gap would. Okay. As far as the Qs, we're not expecting the same thing. It had a measuring gap. Price consolidated sideways, then gap down. Okay. So the more aggressive entry to go short, okay, would be to continue trading the Qs in the direction of that runaway gap. Okay. And we're getting a little bounce on silver. The dollar, US dollar, 10-year and 2-year yield are moving lower at this point, which will help our metals and our FX market. So one I have in play would be the Japanese yen. Okay. Anticipating the Japanese yen to move up if the dollar continues to move lower. Okay. Swiss franc on support as well. Swiss franc would move up if the dollar continues to move lower. Okay. Crude oil. Wow, really quiet. Okay. Still have the same amount of risk, $32 on the trade. Okay. And using the stocks and the Qs. Okay. In futures always follow something, they never lead. Okay. So the stocks move first, exchange traded fund moves second, futures move third. That's why I've always liked trading futures, because there's other information outside the price chart that can help us understand the direction. Okay. And we can see if it the futures are being supported by a bullish move up or if it's going to continue move down. Okay. Right now, I think we're going to see the Qs have that runaway gap and continue moving lower. Okay. We have, what time is it? About 10 minutes away from market open. Oh, sorry, 10 minutes away from 10 o'clock time frame. S&P. Boy, it took out a couple of those zones really quickly. See, what's happening now is the markets are deciding, is this going to be a fresh accumulation of orders and then send price back up? Okay, are there enough new buy orders down here to send the price up? Okay, or is price going to go lower to find demand? Okay. So when we start watching for that accumulation of orders, we start with resistance or support, sellers pushing price down and the buyers below, just like we're the scenario up above. Okay. These accumulation of orders or a fresh accumulation, okay, being built takes time. Okay. Not a lot of time, but it takes time and you got to wait for it to complete before participating in the breakout above the, in this case, 6,055. Okay. Each resistance or support area should have minimum of 3 touches. Okay. Minimum. Got to have a way to define what is support and resistance. Okay. NASDAQ. Okay. We only got 2 touches. Actually, we're looking at 3 now. Okay. Now, this is a particular price pattern. I've dropped down to a 500 tick. That's a little small. We'll keep it for right now. All right. As I'm visualizing this, we did have that move down. We had a pop up. Then we came down and we started making a fresh accumulation. Gotta draw that out a little bit better. The accumulation of orders was close to a drop. Okay. And as I'm plotting this out, as soon as I get my colors right, very often when you have that drop and then you have your 3 touches of resistance, you get the stronger move to the downside, a more aggressive move, which is often associated with a V-shaped reversal. Okay. So in order to calculate what that V-shaped reversal could be, we're going to take a couple of swings in price that I'm outlining right now. Okay. And for a V-shaped reversal, we would need to see where the Fibonacci extensions line up. And generally it's a 224, 2618, or 314 extension. Okay. So for the smaller move, and for the bigger move, we're going to look for where we have a confluence. Okay. And right now we have a confluence much lower, right about this level. Okay. So by understanding patterns and structures, we can often get that follow through and a good understanding of where price may go. Now, we were already expecting the NASDAQ or the QQQs to have more of a runaway move to the downside. Okay. Now we just have to find a way to get into the trade, whereas we can manage our risk and also visualize the right side of the chart. Okay. So my plan for this NASDAQ is now looking for buyers down at about 21,581. But where am I going to get into the trade? Okay, we just don't hit the button based off of partial information. We need to have a way to get into it. Okay. And we may have missed that move on the NQ to get into it short, but we can certainly look for a place to go long. Okay. Boy, crude doing a whole lot of nothing. And we're approaching the 10 o'clock hour. And the market's quieting down a little bit. Okay, so dollar's getting a bounce back up. Let me just bring that over here. You can see the US dollar getting a bounce up, and then you see the yen, euro, and Swiss franc moving lower. Okay. So when we are watching and monitoring the market and the market conditions, okay, we want to be very much aware of what the dollar and the 10-year yield, 2-year yield also are doing. Okay. Now, what we look for is that kind of that domino effect. Okay. When one domino hits the next one and the next one and so on, what are those pieces? Well, generally, the dollar and the 10 and 2-year yield will move first. And then what we will see is the 5, 10, and 30-year bonds and notes start to respond off of that. Okay. Then we see the FX markets and metals markets, and then agriculture. Then comes the stocks. Okay. NASDAQ just dropped back down. Looks like we're in the large time frame zone. And we should just be expecting a bounce off of this one. Okay. So still looking for a way to get into this trade. If we're going to continue to go short, I'm going to look closer to that resistance area. Okay. Okay, the IWM did come back in, filled about half the gap from a breakaway gap. The Dow did the same. S&P should come up a little bit further. It looks like we're continuing to go lower here. What time is it? Yeah, we're right at the 10 o'clock hour. Let's see if we can get a little bounce. We don't have any economic news coming out today on that 10 o'clock. At 10:30 and 11 o'clock, we have crude oil and natural gas. Okay. Also important to get keep track of the volume on the equity index futures. Okay. Lighter volume, higher volatility. I think I'm gonna have to jump in on this one. Let's see how we can manage that risk. All right, I'm gonna jump in
Order filled.
on that breakout. I'm a little late. Much later. Dang it. All right, so I'm gonna have to wait. But see how the picture is playing out? Now, just because the picture is playing out, that doesn't mean that I had a good entry where I could manage my risk. Okay. And that's important to recognize. Not all the information that you collect or see on the price chart, okay, is going to give you a good entry. Okay. You may call the market perfectly. Okay. But that doesn't mean you're going to be able to trade it. Okay. Now, the sooner you can realize that about your own trading style is that you'll be able to control jumping into a trade. Now, I would have loved to have gotten that little breakout. Okay. We'd be doing a happy dance already and done with our day on a Friday. Okay. Oh, come on, charts. There we go. All right. How'd we do with the other ones? Russell. Yep, coming down. Down. NQ just hit the proximal line. I'm going to take a shot at this, getting a bounce.
Order filled.
And we'll come in and right. Man, even just with a small amount of micros, the risk is pretty high. I'm not looking for a trend change. I'm only looking for a small bounce. Yeah, for those who are just joining us, we do put the prep screen zones and our pre-market routine out there ahead of time. Okay, these are the zones and the levels that we are looking for. And we have some pre-market tips and things that we are looking at. And what was in the news. Now, what we use the news for is just to get a feel of what public opinion is, okay? News does not make a trade for us, okay?
Order filled.
Yep. Still going lower. See if we get down to that small time frame zone. And the stocks are still selling off, yeah. Yeah, if you're referring to Elliott wave, you just got an expansion wave. You got wave 1, 2, 3, 4, and 5 coming up. We're just waiting. Look at Russell, S&P also coming down, but we're starting to see that the 30-year, the 10-year, and the 5-year starting to get a little strength off of the demand zone. Okay. So we're looking for a little more commitment to the dollar in order to participate in the bonds and notes. Now look how thin that volume is right there. Price arriving down to that next prep screen zone. I want to look for a little help on the stocks. A nice thing about a V-shape, potential V-shape reversal is the move back up. Okay. And we look for that move back up about 78% of the move down. There we go. I'm gonna take a shot at this one. Actually holding on just a second. We don't see that the stocks are letting up yet. Need to see the stocks start to bounce. So did price arrive on the quarter hour or did it arrive late or early? Excuse me. All right. There's a high risk of going long at that point. And we're getting no commitment from the stocks yet. Stocks always take longer to turn than the individual products. It's a great if you just took it for a little bounce. I want something that's going to last a little bit longer. Microsoft, okay. Let's try this now. I'm going to come in. See if we can get a little bit of momentum to the upside. Hey, Chris, how you doing? Good to see you in here. Instead of hanging from the rafters and doing the work outside. I'm still waiting for that at least a 5-minute candle over here on the stocks to make a turn. We're not getting it yet. Now, let's see if we can grab a little bit on here. I am coming in a little bit late, so I will put a trailing stop on this. Come on, back down, back down, back down. Not quite yet. Yeah, I still didn't have a place to get in short. Go in queue. Got a small leg base group of candles over here. But notice that price came into that zone a little earlier than the quarter hour. Okay. And there's another small level right below it. Now, what I'm looking for is the leg base scoop candle. Okay. I'm looking for price to arrive in that area on time. Okay, we're 3 minutes away from the quarter hour. Now, price hit it again before the quarter hour. I'm going to expect price to go through it. You might get a small bounce, but the move is still to the downside. All right, so our crude oil is in play. Let me get my stop in there. Still waiting on that gas. We're about 13 minutes away, actually 18 minutes away from the nat gas report. So one of the big takeaways today was knowing whether we had um, a breakaway gap or a runaway gap. Okay. The runaway gap is when price consolidates sideways for a period of time. Okay, and then has pretty significant gap away from it. Okay. A breakaway gap is after price breaks a confirm uptrend or a confirm downtrend. Okay. Now, the difference we see with the breakaway gap is that price often likes to come back up, retrace. Okay. And we saw that with the Dow and the Russell. Okay. S&P just didn't get enough movement back up to that. So we want to keep that level marked on our charts. With the Qs, markets just kept coming down. Okay. See, in everything that we do at the market institution here, we want to give first and foremost education, help you understand what you're looking at. Okay. We also looked at this particular price pattern. We had a strong drop. We got 3 touches of resistance, and we saw that the trade played out. Okay. Price also hit this zone earlier than the quarter hour again. So every trade that we're looking on the NQ to go long, okay, is just been a very small little bounce. And if it hits a demand zone or supply zone earlier than the quarter hour, we've seen it go through that. Okay. Also want to point out, let me bring it into view here. If you feel the conditions are higher risk, well, they are. Take a look at the dollar moving up while the bond, or the yields are moving lower. Now, what just happened here is the trading environment shifted to a very uncertain environment. Okay. We're also seeing a pretty significant move up on the VIX, okay? Now, when the dollar and the yields are going in the same direction, the trading conditions are easier to participate in. When they start going inverse of each other, they become much more difficult, okay? And part of that difficulty is just knowing what you should do, okay? It's kind of like you start off with a sunny day and then all of a sudden everything clouds up. Well, you have to understand what those elements are, okay? So the dollar going up and the yields going down, our markets got really choppy. And we're not finding a good direction or place where we can get into the trade. The NASDAQ keeps continuing to move lower, okay? We've filled the unfilled opening gap. Now we got one up on top. And we're seeing that our prep screen zone is getting pushed through, okay? Now that doesn't mean we were wrong. It just means that we had a plan, okay? We are not expecting, on the NQ, okay, price opened outside of the prior session's range. So we were looking at a gap and run, okay? And that kind of brings us back to the picture I had earlier. Price opens outside the prior session's low or high, we look for a gap and run, okay? Combined with what we saw on the Qs, the runaway gap, okay? Now we are approaching an area where we may see a bounce. We have a leg base, leg base. Now this is the Qs. It's not the NASDAQ futures, okay? Price is arriving into the zone after the quarter hour, okay? We do have a leg base, leg base. It's right back at a support area, okay? Yep. Every time that price arrived in that zone earlier than the quarter hour, let's just see, where do we have that? I'm gonna take this measurement, see if we arriving at an extreme area. For a V-shaped reversal, the 314 extension is one of those places we can look for potential trade to bounce. Okay, but we have other elements that are saying, hey, this is a little more higher risk, trying to pick this as a bottom. Okay. Now, a lot of folks are kind of trying to figure out, scratching their head, hey, what happened to the Santa Claus rally? Okay.
Order filled.
Nope, we just got into nat gas. And we're about 10 minutes away from the nat gas report. Yeah, I know. I'm trying to find a good place to get in. Everybody wants to pick the bottom. Okay, but then the Qs is really giving us that signal that that's not the best opportunity. Okay. Anybody riding this short down? I know I didn't have a good place to enter the short, so I've been on the sidelines. Yeah, we're getting to those extremes here. Everybody wants a bounce. I know I would if I was, we missed the whole move to the downside. We didn't miss anything. It didn't fit into our trading plan. Okay. Let's go back out to our larger time frame and kind of look around, see where we're at. S&P is back below the daily 50 moving average. This can be really bearish. And usually there's a lot of drama around that 50-day moving average. NQ, right in the middle of that prep screen zone. Also notice the percentage down the NQ is right now. Okay. See, all of these things, as you build them up and document them, they become part of your trading plan. Okay. But you have to document and verify them over periods of time, because that's what makes you aware of the trading environment that you trade best in. Okay. All right, let's see if we can find a way to get in to continue going short. Nice bounce. Stocks are making the turn, but none of the stocks have made a higher low on a 5-minute chart and a higher high. So the trend has not changed on even the 5-minute. Okay. Now if you're quick, you can capture some of the price move. Okay. But you have to be quick in and quick out, and you have to realize that the slippage is going to be quite a bit. Okay. We need to see a fresh accumulation of orders come into play. Swiss franc, the dollar is just really undecisive. So the Swiss franc is still sitting on that support. And the dollar hasn't committed to resuming the downtrend, even though the 10 and the 2-year yield have. And these drops are crazy. I mean, it looks like a small move. But if you put on the ATR on that, let's see if I have it. I mean, you're talking about 12-point risk, just the average of the last 14 candles. Okay. So the ATR takes a measurement of the last 14 closed candles. It takes the high minus the low and it gives it an average. Right now, that average range for the last 14 candles is about 12 and a half points. Okay. That means every trade that you're taking on average, okay, the candle is about 12 and a half points. So you start looking at your P&L, and if you're trading, well, if you're trading one mini contract, that's $240. Okay. If you're trading 5, you're looking at over 1,000. Okay, versus trading a couple of micros, and you can do the math. But becoming aware that you got a 13-point average candle range, okay, makes you a little more aware of the risk involved in taking that trade. Okay. Because even though the candles and the patterns look small, use that ATR to get a feel for, how big the risk really is. Don't just click the button, right? Soybeans pulling back. Silver, gold, not doing too much at all. Yeah, we're going to need to see the dollar take out the low of the session or take out the high of the session before we get any commitment. Russell continuing to go lower, back into that demand. Price should go a little deeper into that zone. Wow, 15 Dow stocks down. Good eye, Kevin. All right, looking for the Russell to come in to go deeper in the zone. Dow, approximate line entry. S&P should have been approximate line entry as well. Yeah, just keep in mind the information that we collected in the pre-market and what I shared with you about how to understand the different types of gaps, especially breakaway gaps and runaway gaps, okay? Also known as a measuring gap. When you know what type of gap it is, okay, whether it's futures or whether it's stocks or exchange traded funds, okay, if you know what type of a gap it is, then you can manage expectations. Anytime you see these runaway gaps, okay, a lot of folks got hurt in this whole move up. Not everybody was making money. Everybody was losing a lot of money. Okay. They kept trying to pick tops, like trying to pick bottoms here. Okay. Gold. Crude's being really slow. And we have nat gas coming out. We have the report in just about 30 seconds. Remember, today is last trade date as well. Okay. Now, as price gets pulling back, I mean, we still have to manage our risk. I have a trailing stop on this, okay, because I know the volatility of this product. That's what I'm willing to risk on it. But as price gets back down into this range, look over to the left. These big areas right here are very light volume price moves, okay? Almost like a gap, and you can treat it like a gap. Once price gets into that range, it usually goes to the other side of it, okay? Combined with today being last trade day, okay? We are anticipating those that do not want to take delivery will be closing out of the January contract and buying the February contract a little bit later in the session, okay? Now that combined with a report that came out talking about the different inventories, okay? All right. And let's just take another quick look around. Crude oil, I'm anticipating price to come back down into this range here. This is something that we've been kind of a newer study for us. And if you join us over in our Discord room, I'm sure we'll talk about it a little bit more. But it has been a great indication, whether price is above it or below it, we always seem to be, well, in the few sessions that I've captured, we've come back to it, okay? Whether it's from the top side or the bottom side, price comes back to that area. So more and more documentation of that to help us then turn it into a trading plan, okay? That gas, we're getting a little bit, I got trailing stop, $90 locked in. The big key takeaway today is understanding the runaway gap versus a breakaway gap, okay? This you need to know before the market opens, okay? Because all day long, traders will be trying to pick a bottom on these runaway markets, okay? And sometimes they'll get lucky and capture a small move, okay? But very often they get chopped up. And if you understand what is a measuring gap / runaway versus a breakaway, then you can plan accordingly to get into trades, okay? Breakaway gaps, price often retraces back into the gap and then continues in the direction of the gap, okay? So sometime during the day, I'm kind of anticipating that the SPY may need to make it back up here before I have a trade short, okay? And for the Russell, looking around at 2246. And I want to give everybody let's see, next week, you got just a couple of more days left, okay? But I want to make sure that everybody realizes that our price structure is changing, okay? So if you want to capture the prices going into the new year, okay, I suggest go out and check out the website and get an idea because the prices are getting, a sizable increase. Now, if you purchase it before the end of the year, then we'll honor the deeply discounted prices that they are right now. Okay. Let's see. I was trying to remember what else I was supposed to, okay. I would be, okay, here it is. Please remind students and followers they should get subscription now before price increases until July, in 2025. Okay. And the increased prices will not affect current subscribers. Okay. All right, I think I got that right. All right, nat gas working out well for us. Okay, we might see a little bit of a bounce around 3.377. But once it clears that, we should have free sailing all the way back down to the low of the session. Okay. We had a couple of small stop outs on the equity indexes as we tried to pick a little bit of a bounce. Okay, and now we're ahead. And just on crude oil and natural gas. Everybody have a wonderful rest of the weekend, and I will be over in the Discord room doing some trading. If you want to join us in the live channel, more than welcome. Okay. Have a great trading session, everybody, and hopefully you enjoyed the our session as it unfolded today. See you on Monday. Bye now. Let me team, can you post for Tenvy what the Discord room link in there? Let me see if I can get it. Okay, Tenvy, I just posted it in the chat there. Okay. You got it. See you over there. We'll be in the live, we'll be in the voice.